Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. We'll also take a brief tour through our core list of companies, and if you stick with me towards the end of the video, I've got 3 additional trade ideas I want to share with you, so definitely stay tuned for that. Let's kick off our S&P analysis as we always do with our sectors: who was leading, who was losing, and where was the weight. The XLU led the pack today for utilities, up 1.99%, whereas the XLY for consumer discretionary was down at the bottom of the barrel, down 2.55%. An interesting phenomenon that we've been observing throughout the course of the week is the fact that our lightweight risk-off sectors have been leading the way, whereas our heavier weight risk-on sectors have been lagging behind. That really kept us out of trouble on the Tuesday morning open as we saw the rally in the SPY. It was brought to you by utilities, energy, and consumer staples, and that is not what you want to see for a sustained market move. Nonetheless, we continue to observe the same sort of phenomenon with those defensive names at the top and the more aggressive risk-on names at the bottom. So we will check in on all sector charts today. However, the heavier weighted sectors, let's just point them out. XLK for tech, down 2.37 on today's session. XLF for financials, down 0.69, and the XLV for healthcare, up 1.52%. So let's check in on all of the charts, starting with utilities. It's going to be a bit of a deep dive on today's session. What did we say in the weekly watch list video on Sunday? We did not want to see this continue to rally to the upside if we were looking for reasonable pullback buys in the SPY. And what did it do? It continued to rally. So what we're looking for into the remainder of the week is, does this pull back and find some sort of equilibrium around 75? That has me feeling much more comfortable about potential pullback buys in the SPY itself. If it continues to scream to the upside, much more of a risk-off type indication for equities and just the SPY being aggressive to the upside as well. So keep an eye on utilities. You want to see it calm down just a little bit. XLV for healthcare. What do we see in this name? Clearly a great looking chart. We have a break, retest, hold of this level. Prior resistance turns into support. Fantastic. Solid bodied green bar on today's session, closing up at the highs over the daily balance highs as well. Volume is supporting the move higher. It looks bullish. There's no way around it. This chart is fantastic. It's bullish. We're looking for follow through to the upside into those all-time highs around 142. That would obviously be a good thing for the SPY continuing higher if there's going to be more participation from other heavier weighted sectors. Keep in mind that one sector alone, so your XLV, which is fairly heavy in terms of weight, is not enough by itself to pull the SPY higher. So if this is moving higher, fantastic, but we need other sectors working in concert. What we want to avoid in the XLV is any breakdowns underneath 137 at this point in time. Continuing along, talking about real estate, what do we see in the real estate sector? A continued breakout here from this daily balance. Remember from Sunday, we wanted to see it remain in balance or even come down and test that gap. That would have been a much healthier thing for the SPY's pullback, but as of right now, risk off, right? This is a more defensive type of asset class. You don't want to see this creeping up towards highs if we're going to see a turnaround in the SPY itself. XLP for consumer staples. What's going on in this one? Here's the break of your resistance trend line. Just like we've been talking about so far in all of our defensive names, we wanted to see further consolidation around 76. In the XLP, what we can look for going forward, though, is a little bit more interesting because we have this all-time high to contend with around 78. If this does move higher and we catch some sort of pullback off of it, that has me feeling a little bit more confident about, okay, the S&P might have a chance to catch up now with the correct heavier weighted sectors. But if we blast right through that, that's more of your red flag scenario in the XLP. If it doesn't want to get there in the first place, again, that falls into the camp of, okay, I'm feeling a little bit better about the pullback we've seen so far in the SPY. The last but not least of our risk off sectors is energy, and this is the only one that's been playing nicely, giving us a 3-day balance underneath this breakout point, not taking it out to the upside. That's what we want to avoid, right? We do not want to see breakouts in energy up and over 78.50. We want to see it continue to remain sideways, if not break down. That would be a good thing, and again, have me feeling much more confident about the pullback buy here in the SPY itself. If it does start taking it out, again, a little bit more of a red flag. I would also want to acknowledge that, yes, this is a bullish pattern. The pattern itself would favor a breakout, but that wouldn't necessarily be the best thing for the SPY. So hopefully you could see a common theme throughout these risk-off, lightweight type sectors. Let's get into some of the more juicy ones at this point in time. So the XLF, the first one up on the chopping block here, you can see we're sitting right on the edge, and that's probably going to have something to do with the title of today's video, right at the edge, right at a critical inflection point here inside of financials. Look at all this prior daily support in here, in here, in here. It was resistant as we then broke it. It was the gap fill area. So we're at an inflection point, and it's pretty tough to say which way it's going to go right now, just based on on what's going on here, look at today's bar. It's pretty much an indecision doji, right? It would have been a much more bullish indication if we had a green bar that closed back inside of the 2-day balance from right here. That simply didn't happen. It would have been a much more bullish bar if we printed a hammer candle with a long defining lower wick, indicating that sellers tried to keep it lower, but they were unable to. So a strong response from the buyers. It just didn't happen. So we need to be patient here in the XLF and either wait for a return back above that 37.50 or just more confidence above back inside this 2-day range essentially, or a breakdown here, which again is much more of a red flag for the SPY itself. If that starts to crack, I would imagine over time it wouldn't be unreasonable to start looking for 35.50 here in financials, which obviously would mean that this is probably going to be much more than just a mild pullback in the SPY. So hopefully you can see how this is such an important inflection point for financials. Something interesting to talk about here is the fact that the pullback has been more aggressive in the first place inside of financials. I heard some sort of news or someone talking about rather that maybe financials could sort of anticipate what was happening with the FOMC meeting minutes. They sort of knew ahead of time, right? The financials industry. Nonetheless, FOMC resulted in a $95 billion balance sheet runoff plan per month that was, and also the potential for a 50 basis point hike throughout the remaining meetings of 2022 instead of the 25 basis points that the market has sort of been expecting. So did financials know something that maybe the rest of the market didn't know? Maybe. And the reason I say that is because if you look at what's been going on with the TNX, obviously this has continued higher, which in theory should benefit financials, but you can clearly see that financials have been lower, right? So nonetheless, keep an eye on this. We're going to keep it simple this week and only watch 37.50 and not so much be concerned with our rates. We talked about FOMC. Let's continue along. XLI for industrials. What do we see in industrials? A lighter weight sector, not overly concerned with what's happening here. Nonetheless, inverted head and shoulders. There's your neckline. We did not get a break retest and go. Instead, we're back down in the range. So much more of a neutral indication. It's not overly bearish, noting how light of a weight it is in terms of sector weighting. So industrials, not overly concerned, kind of just neutral, right? Same thing sort of goes for builders, really lightweight in terms of sector. There you go. There's your bull flag. We've broken down out of it. We're still above this kind of breakout point here though. So I'm not overly concerned. Again, really lightweight in terms of sector weighting. Continuing along, the big three at the very bottom of the list, again, lending themselves to the title of today's video, sitting right on the edge. You can clearly see there's your double bottom break and retest. We're at that point, right? So 68.58, 68.60 here in communications is a critical must hold area. The reason I'm not overly concerned about this just yet is that we did print a higher high on this most recent leg up. So, it would be a completely different story if we had a lower high and then an equal low reattempt. This would start to build out as much more of a flush point. But for me, because we have that higher high, I'm not ready quite yet to flip to the bear side. Obviously, we haven't even closed the bar underneath that level. So it's the make or break right now. How does the week resolve? Do we close the week above or do we close the week weak, no pun intended, underneath and inside this area of balance right here? Your number 68.60 inside of communications. It will be a pretty big tell for what could potentially unfold in the SPY if it starts to bounce. Much more reasonable and has me feeling much more confident about pullback buys in the SPY. Continuing along, XLK for the tech sector, heaviest weighted sector of them all, possibly the most important one to watch. You can see big gap down into that neckline from the double bottom right here. We're coming off of a much more aggressive higher high right at this prior double top. So to me, not overly concerned with the possibility that this is a flush point. Also notice that your lows in here were stacked higher instead of equally at this level. So 154.50, that's your number. We did print a little bit of a hammer candle on today's session. Nonetheless, it is a red hammer. We have horizontal support. We have horizontal 50 SMA baked in there as well. A little bit of a lower wick. Again, we're right at that inflection point. It's pretty tough to say as of right now whether or not this will resolve higher or lower, but you know my words. You know what I'm going to say. If we resolve it higher, feeling more confident about the pullback in the SPY itself. If we resolve it lower, a little bit more skeptical, right? Maybe this pullback starts to turn into something a little bit more aggressive to the downside. Let me quickly take out the Fibonacci's as well, because this is the heaviest weighted sector, and do something like this. Notice we're right at that 38.2. We are starting to form a bit of a hammer candle on today's session. We've got the 50 SMA there as well. It's a reasonable pullback. I don't want you to be overly bearish just because we had a major gap down on today's session. It's been all rainbows and butterflies on the way up. This is the pullback that a lot of people were hoping for, and now's the opportunity, right? We need a little bit of confirmation, so take out today's high, start to fill that gap. There's your confirmation, okay? We have a nice reasonable pullback. It's time to start looking for longs again. If that doesn't happen, that's more of your, okay, I need some more information as to how this is going to pan out. And if clearly we crack it to the downside, take out yesterday's low, and it's just, big, fast tempo to the downside tomorrow, more of a red flag for the SPY as a whole. So a lot of these things are coming into inflection points points. It's all about determining how the week will close and how they will resolve. Again, this has some pretty bullish implications with the lower wick, but again, we would probably have to take out today's high for me to start feeling more confident about buys in the SPY from this most recent pullback. So we've been watching for pullbacks. We've gotten the pullback. Now it's time to determine whether or not it's going to be just a pullback or potentially more. I do think that the risk reward, if we take out yesterday's high tomorrow, looks pretty favorable, right? You are looking for eventually over the course of time an equal high here. Your risk can be a stop underneath there. It kind of makes sense. Obviously, if it doesn't happen and we go sideways, or maybe we do something like this and you get stopped out, fine, so be it. It didn't happen to work out this time. Continuing along, XLY, the last sector on our list. Then we'll talk about volatility here. Nonetheless, sure, inverted head and shoulders possibility here. Nonetheless, at that inflection point from your neckline of the double bottom right here. Same sort of deal as what we just discussed in the XLK. Reasonable pullback. We have horizontal support. We have the 50 SMA, a little bit of a lower wick. It's not as clean as a hammer as what we just saw in the XLK. Let's quickly take out the fibs just to track what's going on here. A little bit closer to being underneath the 38.2, but nonetheless still well within the bounds of a reasonable pullback so far. So we need to ensure that this does produce some sort of higher low here, and then it's back off to the highs. That would be a good thing for the SPY itself, and clearly breaking down, not so much. You guys know the gist at this point in time. We've hit home all of the sectors here, and by the way, the number is 179 that you want to see hold in your XLY. We've hit all the sectors. Let's quickly take a look at volatility and what this might tell us. Then we'll get into the SPY itself. So the VIX, what do we see on today's session? Big spike in volatility as we got that madness around FOMC, but nonetheless, how did we close? That's the important part. Back down closer to the lows of the candle instead of up at the highs, which strikes me as a good thing, right? We want to see this come back down underneath 2050 for more of a confident type move in the SPY itself. And one more behind the scenes type look at the VVIX, which is volatility of the volatility index. You can clearly see we opened on a gap up, but how did we fare, right? We faded back down and closed underneath that 120 inflection point in the VVIX, which again is a good indication that maybe the VIX itself starts to creep lower into the remainder of the week, which in turn is a good thing for the SPY itself. So enough of the behind the scenes. Let's get down to the bread and butter and talk levels in the SPY. What you'll notice is that some of the gap filled, not all of the gap filled, but we didn't make it to the 50 SMA. We didn't quite make it all the way to that neckline as we saw in our sectors, which strikes me as being a little bit of relative strength, right? We'll come in with our Fibonacci's from the low up to the high. And again, reasonable pullback. Everyone wanted a pullback. Well, here it is. We're at the 38.2. We've printed a bit of an indecision doji. I will say that it's not the most powerful reversal type bar, but if we can take out the high, if we can move back to the resistance trend line, there's a breakout trade here up to here, right? And then potentially monitoring for continuation. So what is the importance of this level as well? Remember from the weekly watch list video, we discussed last Thursday's spike lower. That needed to be recaptured. We needed to find a higher low off of it, and that would have been bullish. We have not done that as of right now. So the next stage would be, okay, can we break the resistance trend line? Can we recapture the spike high again and then do something like that into that 462? So that's the objective if this pullback is going to turn out to be a viable pullback. Obviously, if we remain in range, that's more neutral, and taking out the 50 SMA and 441 becomes more concerning for downside, probably to your support trend line in the SPY itself. Based on the sectors, we're going to learn a lot tomorrow on how all of these critical pullbacks levels hold, whether or not they resolve higher or just break right on down to the downside. Let's take a quick look at our internals here. If you're not familiar with this screen, get familiar. Top right-hand corner is going to tell you what this is, how to set it up, and how it'll help your intraday trading. What can we learn about the internals? Well, certainly on the Monday session, as we got the rally, pretty neutral, especially in the advanced decline line, just kind of going sideways here. More importantly, how was the sell on Tuesday, right? It was actually quite aggressive and fairly sustainable, right? You did reach that negative 300 million read, which is significant. We spent a majority of the time trending lower throughout the course of the day and also getting into trend zone, and the ticks built out fairly nasty to the downside. So I would say that that was some significant selling that we saw on the Tuesday session. It wasn't nothing, that's for sure. And again, that's why we need a little bit more confirmation now that this pullback is going to move higher before we start looking for those longs. In terms of today's session, obviously with FOMC volatility, you're going to get some wonky reads into the close. It didn't quite reach negative 300 million. We started trending higher out of trend zone into the end of the day, and you can see the ticks were wild all over the place. Nonetheless, how did we actually close on today's session? Again, kind of neutral, closer to that opening print, right? Somewhere in here. This was just a bunch of noise. So ultimately, up and over today's high to fill that gap overhead and get into the daily resistance trend line that we just discussed, or it's a little bit more of a bearish implication to break today's lows and just sort of not sustain this pullback in a reasonable manner that we've been seeing thus far. So let's quickly take a look at our ES market profile. What else can we learn about the market activity? There's a couple of things I want to point out. Clearly, the J period lows are weak, right? We have basically virtually, we have virtually no structure down here. It was single prints and also very thin volume. So anything that technically breaks underneath 44.55 in the ES, I would just look for it to go early and not necessarily want to respect those single prints that we've seen here. There's not a whole lot of structure. There's not a whole lot of people that want to defend positions around that area. So keep in mind that we could see a breakdown sooner than yesterday's low, which would be 44.55 as we just mentioned. To the upside, another important thing that I want to point out while we're talking about market profile is the spike from the Tuesday session into the end of the day. So we do technically have single prints around 44.3350, which you should carry forward as resistant, right? Because it's the top of the single prints, the top of the poor structure. If there's some sort of rally that not only fills the gap, but moves a little bit higher, that's the first place I'm looking for resistance. It's also going to be a nuanced level because it was the low from right around in here on the Monday session, right? So 44.3350 will be a critical level in your ES. Watch that to the upside, and as we pointed out, watch out for potential for an early breakdown underneath that 44.55, we called it, because of the single prints underneath. So that's our ES in a nutshell. Pretty in-depth analysis on today's session. Let's get back on over to the platform here and round out the broad marketplace with our QQQ NASDAQ 100. Very similar. Again, what we want to see happen here is some acceptance over today's highs into and filling of the gap, and then the resistance trendline is in play. That could be your breakout point here. This could be your confirmation as we work our way towards it. That would strike me as bullish. If we start giving up this level, the 352, notice a little bit of relative weakness here in the sense that if we take out the fibs on the Qs, we're at that 38.2. If we take it out, if we take out that neckline, probably moving lower, right? Probably moving lower, at least to that 346 coming from here, and then resistant there as well. That would be your downside play, whereas the SPY is kind of more respectfully above the 38.2. So nonetheless, I would watch out for this for confirmation into tomorrow's session. Then your next breakout point really for more confident longs in the QQQ is over the resistance trendline, equal high, follow through after that. To the upside, as we know, your resistance trendline is the play. Again, if the sectors are really breaking down, clearly downside could be in store at 346 as we just pointed out. Next one after that would be here around 335. So watch to see how this level resolves. As of right now, reasonable pullback, break and retest of this level here in the grand scheme of things. We want to see a little bit of confirmation into the end of this week. Continuing along, talking about IWM Russell 2000 and the small caps. This one is a bit of a head scratcher, right? This is much more of a risk off type signal for the marketplace, falling back away from that 208, breaking down underneath that 204. Sure, we are at the support trend line, but nonetheless, remember the significance of that 208 level. You can also look at this as a head and shoulders pattern right here. We're firmly underneath the neckline. That means critical resistance will be at 204 at this point in time. Any up moves should expect some resistance there, maybe a move back down lower. If this breaks the support trend line, look left, kind of filling up the triangle is the next play here, down towards 193.50, which again is more of a risk off signal for our equities market. So let me just go ahead and zoom this out to a weekly time frame to illustrate once again why this inflection point is so important. There you go. There's your lows. Failed attempts that created the double bottom, correct? Here's a failed break up above, and you can clearly see the weekly is headed back lower towards the midpoint of that range. Are we going to play ping pong in here is the question that you need to ask, and again, that does not bode well for a risk on signal for the rest of the broad market. So that's going to wrap up the broad market. Let's continue into our core list of companies briefly, and then I've got those 3 trade ideas for you. What do we see inside of Apple? Clearly, all of these stocks are going to have a gap overhead, or at least most of them. That's going to be the main focus if you're a scalper into the remainder of the week. That should go without saying, but clearly if we can get some acceptance above that gap and do something like this, that's a much more bullish indication that we're just playing ping pong in this range. Pull back, bottom of the range, back to the top, target would be 179. If we crack down underneath today's lows, much more of a bearish implication obviously, and you're looking for next support around 167 and 50 SMA here inside of Apple, that would also be the back test of the neckline here of the double bottom. So again, that's kind of your critical must hold area at 167 if it is lower in the first place. And again, today's session, fairly indecisive. Indecision doji question mark candle, as we call them on today's session. Next up, we have Netflix. What do we see in Netflix? Continuing to get that inverted head and shoulders phenomenon. Notice that we supported off of the neckline from in here, really sloppy double bottom, but nonetheless a double bottom, and still kind of in the range or acceptable sort of area, if you will, of this flag and consolidation right here. So as we've been saying in the past, the more confident short is only down underneath 362.34 from this area of prior resistance, which is now offering support, and we didn't breach it, right? So if we do, again, fine, more confident for shorts, but as of right now, neutral in this zone. Now that we have two highs up here, the next real confident long is simply up and over 397. Anywhere in this range, it's kind of anyone's guess. Because we're skewed towards the bottom, I would say if you're really aggressive, you could take a long looking for a rotation back higher with a stop here. But note that after two failed breaks, maybe it's more likely that the move is actually lower. You would have to accept the higher likelihood of taking a stop instead of, having that trade work out for you. Just an idea, but something to consider here inside of Netflix. We talked about confidence levels here and down and out underneath there. Continuing along, Tesla, the big sort of shakeup, double gap, right? So we obviously started to fill a majority of that downside gap here. Not quite all of it, which I would point out as being interesting and nuanced. Nonetheless, we have a little bit of gap overhead to fill as well. The main thing to watch is your resistance trend line coming from here for that higher confidence long at this point in time. Don't get me wrong, for scalps, there's plenty of opportunity to trade around in here. I would say that the top of the gap is essentially an inflection point based on being the low end of this range. That number is 1078, 1079, 1080, that rough area right around there. So watch out for that as resistance. Obviously, if we continue lower, your critical support that wants to hold is around 978, and that's coming from, if we just drop it on down to a smaller time frame, you can see all of that consolidation above before that gap up was produced. That's kind of the level you want to see hold based on a little bit of a hold here and just consolidation above, right? 980, 978 is technically the level I have. Nonetheless, that's what you would watch for if we see any sort of breakdown to remain bullish and get something like that. If not, if this continues underneath, thin structure probably down until 950. I mean, you can see these breakout points, right? There you go. That's the break. Big retest if that happens. Maybe it's bullish after that, but those are the levels I have to the downside. Probably choppy in here. I'm not overly confident in what went on today's session. You can see as FOMC unfolds, big bodied candles back and forth, no real trend, just a lot of volatility. So that's what we've got inside of Tesla. Back on over to the daily, back on over to AMD. What do we have in AMD? Getting closer to that 100 support point. That strikes me as interesting here. Any sort of reversal patterns that start to reveal themselves around 100 catch my interest for at least a move back higher towards 110. This area from here where we got that breakdown from. So 100, watching that for critical support. Again, any sort of bullish patterns down here could be a double bottom. Stop goes under lows, looking for maybe a little bit more. It depends on where that neckline is. Intraday double bottoms off of 100. Basically, any reason to get long close to 100 strikes me as good risk reward. Stop goes under lows. And again, looking for the back test of 110. If 100 does happen to break, what do we have for supports underneath us? Because this is a fairly or a newer stock for us to be charting. Remember that we had Alibaba here. It feels like ages ago already, but our next level underneath would be closer to roughly 95. So about a 5-point move to the downside available if we crack 100. But again, based on today's indecision, if the market starts to turn tomorrow, again, maybe it's an excuse to get long as close to 100 as possible with a tight stop just underneath. We talked about 110 target. Facebook up next. What do we see in Facebook? Certainly a reasonable pullback going on here. Off of these highs, again, you have that gap to be trading for into the remainder of the week. That should be probably your focus if there's an upside play to be had. This is your breakdown point, 220.217. If so, only go in a 217. Remember that this is really, I think that there's some relative strength here, believe it or not. Even though the daily chart based on the earnings gap down is horrendous, think about this move and the context of it based on everything else coming in already to that neckline retest. Notice that Facebook is well above. It's also above this breakout point at 217. So I do want to see 217 continue to support if we get there, looking for bounces off of it. Again, noting that if we take out the fibs, it's going to be well within the range of a reasonable pullback, right? There's your 38.2 coinciding perfectly at this point in time. This is what we've been waiting for. The market felt like a runaway train. Let's see if we can finally take advantage and get some risk-friendly entries based on some of these pullbacks that are starting to develop. So again, 217 could be a breakdown underneath 222.17, but watching for that reversal off of this and to the upside, contending with the gap and the high around 235. Next up, we have NVIDIA. What's going on in NVIDIA? A much nastier move. Nonetheless, if you want to count that as your double bottom, big retest here, big gap still overhead, resistance trend line in play. This one looks a lot more bearish, right? Just based on the candle structure structure that's been unfolding. We've been talking about the head and shoulders here as well. Your neckline is the gap fill area. So even if we do rally into 260-ish area, I would be watching for resistance there. There's clear opportunity for that to produce yet again another lower high. Could be a reshort back down towards the neckline here, 244. If we don't make it there in the first place, if we just kind of go sideways, I would watch to see what the reaction is at your support trend line inside of NVIDIA. Even if we get to it sideways through time, just waiting to see, do we find support there? Or if not, if we crack it, again, look left, your next structure is probably here. Let's map that out together. Oops, we want to switch tools quickly, and we'll try that one more time. Your highs are all stacked around 230 would be next support. If that breaks, again, you get more of that filling up of the triangle, boom, something like that to the downside. So those are NVIDIA thoughts. 260 upside critical resistance, and to the downside, if we do continue, 230, watching to see what happens there. Microsoft, what do we see in Microsoft? Certainly getting into that support trend line, into that horizontal level from here, into the 50 SMA. To me, this is definitely one of the ones that I'm eyeballing for a reversal tomorrow. If it wants to reverse, it makes sense, right? Support trend line, horizontal level, 50 SMA, stop can go right underneath all of it, looking for a move back up to the gap, if not into the gap, to fill up towards that 310. After that, look at this pressure cooker top that's building on the daily. If we can retest that after a pullback, that's proven that, hey, this gave the chance for new buyers to get on board, and it also took out short-term sellers who got no follow through underneath the support trend line. I mean, that to me is a beautiful thing if we can take that level out, 316, over the course of the near-term future. So watching that inside of Microsoft, if it does crack all of this support in here, that's fine, let it go. I wouldn't try to chase the falling knife here. Next support is around 289.50. I would wait to see what the reaction is around that level before trying to look for that next short-sided trade, essentially. So something that does this, lower high, fine. There's a potential short stop underneath the over the high, rather, looking for something that does this. But again, not really chasing it short here, rather watching for any excuse for a reversal back to the upside, noting we have triple super support at this area. Last but not least, the beast, we have Amazon getting through our core list, and I've got 3 additional ideas for you. You can clearly see a break of the support trend line that is no longer in play. We're going to remove that, and instead what you'll notice is in play is a resistance trend line now coming from here to here. That's got a break for the trend to move back to the upside and give us the break of this bull flag, essentially. Just like everything else, you've got that gap to contend with overhead. I would just remind you of the importance of 3176 needing to hold. Not only is it the weekly double bottom, so a much larger area, giving us that resistance point right there. I can show you that on the weekly time frame. There you go. Here's your support, neckline. We're getting right back into it on a decent little pullback. So 3176 wants to hold. If you're a longer term trader, any bullish pattern that unfolds here on the daily would be viable to me. So if we do something like this, higher low double bottom, boom, boom, break of the neckline, break of the resistance trend line, that should be a clear signal for longer, at least to here into 3416, if not 3500 over the course of time. That to me strikes me as reasonable. If we crack and find acceptance underneath 3176, next line in the sand has to be here. Anything underneath 3094, much more concerning in Amazon. Maybe it's all the way back down towards the lows if that level happens to crack, noting it's a prior structure from right around in here, also 50 SMA on the daily. So that's been a long run around. A lot of these companies are sitting right on the edge of critical inflection points. It's time to see who will take advantage of the pullbacks and who will not, and will be too scared to do so. I will tell you, I did buy some stocks in the long term this morning on the gap down. Nonetheless, getting into these trade ideas, AT&T, what do we see in this for our first trade idea? Clearly just an area of balance. If you've been watching Verizon, so this is another thing to keep in mind, is sector strength as a whole. What has Verizon been doing? Clearly screaming to the upside. So AT&T kind of playing in that same exact space, stuck in its balance still. If we crack the highs, maybe it wants to play catch up and move closer to this area right here. So let's switch tools, try that one more time. That's definitely something I would be keeping an eye on around 25.50 if we can crack this range. It's much more than a range double. Traditionally, we are looking for the range double. That takes you closer to 24.75. But nonetheless, bullish setup here. If we can crack these highs, stop goes under lows, makes sense, right? Risk here to reward here. Stop can go to break even as soon as possible. I like the idea. If it cracks the lows, I'm not overly enthused about going short, just noting how this has been really grindy and even sideways as the entire broad market was really pulling back aggressively. This essentially, this area right here was where the market was falling apart. The market was rallying in here. If this one wants to play catch up, I think it's long over that 2416. Nonetheless, next trade idea is on CMCSA. There we go, Comcast. CMCSA load. There you are. And you can see we've got the chart marked up already. Daily pressure cooker top, indecision doji on today's session, holding above this neckline right here after a period of consolidation for 3 days. If we crack 48.22, looking for the rotation higher into the last lower high, so from here to here, correct? That's 49.57, and you essentially want to see it above this support trend line right here. If it does happen to crack that and do something like this over the course of time, maybe it's still in play, but as of right now into the remainder of the week, certainly want to see it above the secondary support trend line and stopping out underneath a break of that level. Just like inside of Microsoft, we have 50 SMA, we have support trend line and horizontal area coming from prior structure, giving us a triple super support at that level. So that's Comcast. We talked about upside there. And then the last one is downside on RBLX for Roblox. What do we see in Roblox? Certainly a range, just like what we saw in Verizon. However, notice that we're already starting to get that lower high phenomenon. We didn't really rally with the rest of the market here as strongly. Sure, you could make the case for an inverted head and shoulders, but that's only if the neckline breaks. 50 SMA is also there. So if that does unfold, fine, you can take it long, but I'm starting to classify this as a bit more of a flush point. Notice that we have thin structure on the way up. If we break 45.71, looking for the rotation back down towards the lows at 36.22. That's going to wrap up today's video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description. We've been taking a break this week, but normally it's 3 to 12 video ideas every single day. Nonetheless, check it out. You know the deal. Drop Night Owl in the comments section if you made it all the way to the end of the video and you watched it on the night of April 6th. That's going to wrap up the video. Hope to see you in the live stream tomorrow. Wishing you all a green trading week.